So we reached the end of another brutal week in crypto. Look at the weekly bubbles. Look how red everything is on the markets. And if we look at Bitcoin again, struggling to maintain this range. The worrying thing about all of this is that when we look at the NASDAQ is screeching to all-time highs. And you've got to ask yourself a question. If the NASDAQ is screeching to all-time highs and risk assets are screeching to all-time highs, why is crypto actually looking like it's looking? Is there something that's fundamentally wrong with the market? Do we need to change something fundamentally, or is this just a natural part of the cycle? That's what we're going to be discussing today. I've got two great guests, and we're going to dig deep into whether this market is going to recover now or whether we should be prepared for more downside. It's a massive show today. You don't want to miss the insights that these two guests are going to bring you guys. It's going to be one of the biggest and highest alpha shows we've ever done. Let's get the show going, guys. I mean, you got to admit, it's painful to watch the bubbles being so red when you look at the stock market, and the stock market is basically going to all-time highs. And I think we've got to ask ourselves some really tough questions here. Like, is something broken with this market, or is this just part of the normal market cycle? I mean, we do know that after the halving, we usually get some kind of correction, but it just doesn't feel natural that the normal markets are running so violently. And crypto is classified as a proxy for risk assets, and this market isn't performing. So today we're going to dig deep into why this is happening. As I said, I've got two amazing guests with us. Before we actually get into the alpha of the show, I've got to remind you guys that this month we have picked up 10% of the subscribers to the channel. Join our community, join our channel, subscribe to the channel. If you have been here for a while, smash the like button. We are going to bring you the highest alpha per minute show, or the highest alpha per minute Friday show that we've ever done. I am going to remind you that the Friday shows are actually sponsored by NordVPN. And I've told you guys a million times before, we're going to make a lot of money in this bull market. I know it doesn't feel like it right now, but believe me, we know what these bull markets look like, and we're going to land up making a lot of money. And if you land up losing some of your money in trades or in bad investments, that's cool. That's part of the game. But where you don't want to be losing money, you don't want to be losing money in hacks. You don't want to be losing money by exposing your IP address to hackers and to dirty governments, right? And so the one way that you can actually surf anonymously is by getting a VPN. And if you're in crypto and you're not using a VPN now, then I don't know what you're expecting. Because if you're surfing without a VPN, you are effectively exposing exactly where you are. You're exposing your IP address to governments, to DeFi protocols, to exchanges, to everything else. You're pretty much giving away your identity. Now, to hide your identity, get this, you pay $3 a month or less than $3 a month to surf completely anonymously. Now, if you sign up for this now, you also get a eSIM data gift, which is a new service, which is called 𝗬𝗠. Josh, I didn't believe that I knew so much about 𝗬𝗠, but what 𝗬𝗠 is, it's an eSIM worldwide data service. So if you sign up to NordVPN, you also get a data eSIM gift, which means that you can use data all around the world, in all these countries around the world, whenever you travel. So listen, sign up now, support the channel, and make sure that you actually protect your crypto. With that out of the way, let's get the show on the road. I know everybody's asking the tough questions about when this market is going to recover or why this market's doing what we're doing. I've got two great guests for you today. I've got Avi and I've got Santi with us. Guys, welcome to the show. And Avi, welcome to the show. And Santi, welcome back, my friend.
Thanks for having me.
Listen,
thanks for having me. Appreciate it.
Listen, we've got to ask some tough questions here. What is actually going on? Why is it that this market, what is going on that we've got the crypto markets looking like this? You got the crypto markets looking like that, and you've got the NASDAQ pretty much at all-time highs, like pretty much surging at all-time highs. When I signed up for this, they told me that we're a proxy for risk assets like the NASDAQ, that when risk assets run, Bitcoin's going to run. But that's not what I'm seeing on the charts. So is it that there's something fundamentally broken? Is it that that this is a natural part of the cycle? What are your thoughts here? Avi, I'm going to start with you because you told me earlier that you went into this bearish.
Yeah, I think publicly I've been quite bearish for a while on Twitter, on my own pod, on just basically anytime anyone asks me, I say I'm nervous about the market and I'm leaning. I'm not super exposed anymore, and the reasoning is because if you step back, you just always have to know why you made your money. When it comes to any market, you have to understand, how did I actually make this money? And the answer with this particular run is that we all made a lot of money because of the ETF and because of the speculation on the ETF and because of the inflows that were going to come in. And now we've reached a point where the ETF inflows are steady state. So when Bitcoin goes down, you actually see outflows. When Bitcoin goes up, you see inflows. People are using this as a trading asset now, the ETF. It's no longer this asset that just sits there and accumulates and accumulates and accumulates and accumulates. It is an asset that fluctuates with the price of BTC. And that's because as of right now, in this moment, there are no new inflows coming in from your traditional institutions or no new inflows coming in from your allocators. But that's because it's just, that's the moment that we're in. This is Q2, right? And so basically what ended up happening is everyone that approves allocations in Q1, they come in the first half of Q2. And we're probably in Q3 going to see new inflows start coming in again because people have approved allocations in Q2. But what that leaves us is a 2-3 month time, or basically a 2-month time period where you don't have new inflows coming in. Everybody that bought in speculating on the ETF is cashing out. And you just see this in the charts, right? There's just no momentum anymore in the market. Alts are down, 70 to 90% across the board. BTC is only down 10%. And what that tells you is that there's just not a lot of new money in crypto right now. There are just a lot of net sellers. And so while I'm not super bearish on BTC and ETH in general, right? I think BTC and ETH, maybe they go down 20% from the highs, maybe 25. Alts, I think are in a world of pain, especially the ones that have high floats and have a lot of unlocks coming. And you can just sort of sit around and wait to see, what happens with the ETH ETF if we get new inflows. But now is a game of just waiting and seeing, because what's clear is that momentum is no longer to the upside, momentum is to the downside.
Santi, what do you think of that thesis? I mean, it's quite depressing, but what do you think of the thesis?
I don't think it's wrong. I mean, Avi's more of a trader than I am. Again, near term and in any bull market, it's normal to have these pullbacks, 20-30%. If you look at historically, every cycle's had these pullbacks. So the question is, like, I'm not in the business of trying to time these pullbacks. I mean, I think you want to position yourself as early as possible into names and ideas that you like, understanding that I think timing the market beats timing the market. There are people like Avi that are good at timing. I'm not. I feel, again, pretty good and constructive in terms of medium to long-term fundamentals. And
so let's see if we agree. Avi, medium to long-term. And when I say let's define, in this case, medium to long-term as, end of the year.
I'll concretely say one thing. I think we end the year breaking all-time highs. December, we will be at all-time highs. That's my thesis.
Okay, Avi, what do you think of what do you think of that thesis that, let's say, by end of the year we're past this and we're breaking all-time highs? Let's just see if I'm trying to get a feel for whether we agree on that or not.
I think it depends what market you're looking at. Not to cop out of the question, but we've seen tremendous amount of dispersion in this market where things that are actually good go up and things that are bad go down. And so I think that there's a large portion of this market that will never see all-time highs again, ever. I'm thinking of like all of the terrible L1s that came out at $5 billion valuation that just have insane net sellers and no actual usage on them. These things are not going to see all-time highs, in my personal opinion. Bitcoin and Ethereum, I'm absolutely on the page of Santi. They 100% will. And the reason is because the fundamentals just continue to improve for these two assets. I think for Solana as well. Yeah. But if you are in the business of, let me go buy a world coin and hope that this 5x's, I think that you're just in the wrong game at this point. That can work in a different market. That can work in a market where, there's a ton of euphoria and everything's coming in. And I actually don't think that we're going to get that through the end of, we're not going to get crazy euphoria through the end of the year, because I think the veil has been pulled. People understand that this game is just, they're being played on these high FDV assets that don't actually do anything, and that they're just getting dumped on by VCs and insiders left and right. So I'm not necessarily sure. I think that probably takes, a year to 2 years to 3 years to wash out those market participants and get like general euphoria in the market. But BTC and ETH, I mean, Santi's right. Like there's no reason.
I'm thinking about majors, and I've been consolidating into majors over the last 2 months. Avi's absolutely right. I mean, I think you have to understand where you make your money. And I will point out, like, the meta is shifting across a couple of things. like high flow, like high FTV, low flow coins like WorldCoin, I think are in for a struggle. We're
It's
in
not.
an
It's not.
environment
It's not
where
only WorldCoin. Come on. It's. I
no,
mean,
no, 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 no.
it's 𝗂𝗢𝗃.
I'm
It's
just talking.
Starknet. It's.
Yeah, no,
It's.
it's Arbitrum. Like all these projects that not all are created equal. I would argue like something like Arbitrum is actually at some point will be a good buy for ETH beta. Maybe not right now. You continue to have unlocks. The reality is the market is not absorbing all these new coins that are being launched. That's so I'm very skeptical and I'm cautious to touch stuff that has a lot of unlocks coming, and they're all telegraphed. The market knows about it, but still, every time there's an unlock, like people are dumping. A lot of it is also funds that are like trying to catch up to their high watermark that haven't made money in the last year. They want to just, sit in profit, even though, and they're indiscriminately selling. Candidly, like if they're still up 2-3x, they'll sell, right?
Yeah. I want to show
I think
you.
you're in that environment.
I want to show you a little analysis which I did, and I mean it's very surface level, but it's probably worth looking at. So I took the last 2 months, and I said, okay, let's look at the total money that came into crypto in the last 2 months, and I broke down the two funnels of money into crypto into one, the increase in stable coins, which is represented here, and you can see that if you go back 2 months, so just more or less to there, we had 157 billion, so we've got $5 billion of net inflows into stable coins, so that's 5 billion. And then I took the ETFs and I said, all right, in the last 60 days in the ETFs, the net inflow was $2.5 billion. And I kind of assumed that was the only two inflows into the market, money into ETFs, which is one pipe into crypto, and money into stablecoins, which is another pipe. Now, I know that's not 100% accurate, but it is quite a good description of what's going on in the market. But then what I did was I actually took the last couple of high FTV launches. And I said, all right, well, let's just look at what's launched. And there's been $34 billion worth of high FTVs across these projects alone, which is layer 0, 𝗔𝗂𝗃, IONET, 𝗓𝗢𝗃, Starknet, Athena, Wormhole, Altcoins, and so on.
Ron, you just pulled up my list of shorts.
Yeah, so
like this is literally my list of shorts.
yeah, so I did this and I kind of said, hold on, if you're getting $7 billion of inflows and then you're getting $35 billion of FDVs, and you got no retail actually coming in to buy the bags because the retail is not here to buy the bags anymore because we see the data that the retail is not here. There is no other option. Well, so now add to that this. So this is another thing that you probably want to add to it is this. I had some data over here which showed that 2 million new coins launched in this year alone. 2.5 million new coins had launched this year alone. And then you kind of realize that, hold on, there's just no way mathematically that this market can go up. You're launching 2.5 million coins. You're launching $100 billion of FDV, and there's only $7 billion flowing into the market. There's absolutely no way that this market can sustain. Now the question is, what gives? So does the market completely reprice and you get all these tokens going down 50%, 80%? What gives? How do you resolve this fundamental market problem where you got no inflows and you just got more projects with more tokens launching every single day with the same amount of buyers? I need to understand how, over time, the situation resolves itself.
Well, the thing is, the situation resolves itself very simply, and it resolves itself in the same way that all bubbles have resolved themselves, which are that whenever there's a demand for something, supply increases to match that demand. We produce things to match demand. And there's a tremendous amount of demand for altcoins. Everybody wanted to buy an altcoin. Everybody wanted to make a lot of money. And so people, what they do is they make altcoins for these guys. And this happens in every bubble, right? Every tech, when the tech bubble came out, everybody pivoted to tech. They all turned their companies to tech and they tried to give people tech things to buy. In the railroad bubble of the 1800s, everyone tried to pretend like they were building railroads so that people could buy railroad stocks. I mean, like, this is just what happens. And the reality is that the vast majority of things are just priced far too high. And so everything that you see in that list is probably going to trade under $1 billion valuation at some point in the next month, in the next year. A month would be crazy. In the next year, in my personal opinion. But that doesn't preclude the fact that there are real, genuine things that are being built that you can buy that are not crazy overpriced, that you can feel happy sitting in. It's just, if I could give one piece of advice, not financial, but just general advice to the audience is stop buying things that are so clearly overvalued by every metric.
There's there's some nuance that I like. I completely agree with that 𝗬𝗢𝗄 said. There's a couple of things, right? Not all FTVs are created equal. you have to look at the emission schedule. Like something like Filecoin has a incredibly long emission schedule. Other projects have 3 year emission schedule. So I would actually look at like year +1, +2, +5 to look at like that FDV. Because like I think it's just like important. Now the market might not care and just look at the FTV and just indiscriminately, punish that. The other reality is like if you're gonna do any analysis, and anyone can do this, there's like a great website that shows the unlocks for most projects.
Yeah,
take a look at that. Probably don't touch a lot of stuff that's like unlocking a lot.
Let me ask you a question.
know
Do you
that
look at FDV or do you look at token unlocks? Because to me, I just look at FDV and I don't pay much attention to token unlocks. I kind of say, look, so you're looking at.
I look at unlocks. Because like something like Arbitrum is a really good example, and I don't know if you want to pull up the chart. Arbitrum, if you price it against ETH, looks really bad. On a circulating market cap, it actually hit an all-time high, even though the price went down from like $2 to $1.75. Now it's like a sub $1 again.
But the token releases are just so big that it's like that it's.
Well, the first one was like 20%, and then every other month is less. So the market at some point will start to absorb that. And I think that will probably be the sign of where, if there is a meta shift, if there's more flows coming, if there's tigers of the world decide to come back into the space and buy quality stuff. Historically, they've liked to buy these type of things. Like Arbitrum is, in my estimation, probably the best L2 out there. Now, is it better than holding ETH? Probably not, because like the ETF meta is really strong for ETH. But like I'm paying close attention to the unlocks more so than FDV, and projects like Arbitrum that have these pretty big emissions, like in a monthly basis. And at what point does the price stop going down at that month of the unlock? And I think that will probably take the bottom of like just a lot of these projects, higher quality projects at least.
You spoke about Arbitrum. Let's quickly just bring that into the ETH narrative. So we do have an ETH ETF, which caught, I think, everybody by surprise. I don't think anybody was expecting. I think 14% of people were expecting, according to Polymarkets, 14% of people were expecting the ETH ETF to get approved. So I think we all got caught out by surprise that the ETH ETF actually got approved. Now you've got the ETH ETF starting to trade. So I have a few questions around the ETH ETF starting to trade. First question is, do we think that this is going to be a good thing for ETH? And when I say I know long term, it's going to be a good thing for ETH, but I have to show you one chart which is quite scary for me. That's the GBTC equivalent of ETH. And inside that GBTC equivalent of ETH is $10 billion worth of ETH that has been locked up for as long as this trust has been available. And so we're going to get a GBTC problem, but we're going to get it on ETH. Only that the quantum is, if you're on a relative basis, this quantum is actually bigger for ETH than it is for Bitcoin. So my question is, if we're getting the ETF approved without the pent-up demand that we had for Bitcoin, don't you think that we're now going to get a $10 billion of ETH overhang coming onto the market as soon as this opens? Because I'm assuming that the SEC will approve all the ETFs at once and that this Grayscale trust will actually be converted into an ETF when the others get converted into an ETF. So are you worried about the overhang? Are you worried about this 10 billion that's just waiting to flow up, that's been unlocked and that's been locked and is now becoming unlocked? Or is it going to be like when the ETH staking unlocked and actually people didn't unstake the ETH, they just kept them staked?
It's a good question. I was more worried about this when price was higher. As price comes off, I think it matters less and less. And this is sort of three parts to this. One is that it's not all going to come out. I think only a portion of it is going to come out. And then the second question is, will there be offsetting inflows to match that? And then the third is, well, what is the market expecting? I think when ETH was trading almost 4K, the market was basically pricing in that there would be a ton of inflows and no movement from this unlocked capital. I think now the market is slowly starting to realize that, yes, there's going to be like maybe $2-3 billion of this ETH is going to come out, and you're not going to get offsetting flows. And if ETH trades 3K, then I think that people are far too bearish. So it sort of depends on where you are. So I'm like sort of worried about it right now, but not really, because I think we've like priced that in a bit.
Well, like, can you remind me, Ran, of like the actual quantum for the Grayscale Bitcoin Trust?
26 billion on the day that it launched. It was 26 billion, and Bitcoin had a market cap of about $1 trillion, more or less.
Yeah. So it is 2.5 times larger, right, in terms of the quantum. I think I'm in Avi's camp, in the sense that 10 billion is not a lot for the market to absorb. Like if you think of like the broader like Wall Street apparatus, like 10 billion is a drop in the bucket. I think I think Ethereum opens up a really interesting possibility here for an allocator that is far more interested in tech. And I think you'll favor Ethereum over Bitcoin. It's a hypothesis that I have. I think Ethereum is more like, if you want frontier tech, I think you go to buy Ethereum, less so Bitcoin. I think a lot of Bitcoin is being traded as like a vol kind of thing, instrument. A lot of like macro hedge funds like it for that reason. They can make money on like, a wide variety of strategies I don't want to get into, but I think Ethereum is more so like if you look at like the amount of buyers for the ETF, like I think the Yano had a really good thread about this on like Coinbase Institutional Day. Most of the money in the inflows, now correct me guys if I'm wrong, but the vast majority of inflows is coming from retail, not even registered investment advisors or hedge funds. So this is self-directed accounts, which is most of the money, wealth in America, like 60+% of it is sitting on institutions like registered investment advisors, wealth managers.
Yes.
Most of the inflows are coming from self-directed accounts. These are people that prefer to, the same reason there was a premium on GBTC, the convenience of having an ETF, the tax efficiency, all this stuff. And so I think we haven't really seen full-on institutions jump on Bitcoin, less so Ethereum. Ethereum is just a very unique product for the market, I think. Like,
which one do you think that understand?
You can buy MicroStrategy, you can buy historically Coinbase, but Ethereum itself, I think, is more of a tech bet than is Bitcoin. And for that reason, I think 10 billion is not a lot to absorb.
Which one do you think the institutions will understand easier, Bitcoin or Ethereum? Like, Bitcoin is a unique asset. It's a store of value, but it is the main asset that's been around for the longest. And then you've got ETH, and ETH is like a tech product. It's like, they can price it on gas fees and fees per user and user acquisition. And they can't really do that on Bitcoin, right? It's like a new paradigm for them.
No, Bitcoin's a commodity. It's like oil.
So
I think the meta on ETH as a tech asset that you can do a discounted cash flow, you can price it with like all the tokenomics and the stakeable component of it, and the yield is something the market just hasn't seen before. And I may be totally wrong here, but it's something that I think if it works probabilistically, there's a really high chance that Ethereum catches a meaningful bid. Just from like new allocators, people that are more interested. Like, let's put it this way. I think the market is really interested in having tech exposure. Just you look at NVIDIA, you look at AI, you look at, if Ethereum somehow gets roped into that narrative as a frontier tech, I think it's off to the races.
Here's my concern. We're less than 1 month away. The speculation that I've seen is that we'll probably get this ETF approved around the 4th of July, somewhere around there. I mean, this is a speculation, but it's coming there or thereabout. I remember the pent-up demand that was there for Bitcoin. I remember the ads. I remember the hype around Bitcoin. I remember BlackRock talking about Bitcoin. I don't hear that for Ethereum. I'm not getting that Wall Street has this pent-up demand for this Ethereum bid. I'm worried that, as we get off the races, I don't think we're going to get the inflows. And I think people are going to start comparing the inflows to the Bitcoin inflows because they have a frame of reference and they only have one frame of reference. And they're going to go, oh, hold on. The Bitcoin ETF in 3 months got $20 billion. ETH can't even get $1 billion. Oh, my goodness. And then I'm just worried that we haven't created that pent-up demand for ETH because we were all caught off guard. Or I would say we were all caught off guard. The market was caught off guard. So I have a concern that maybe this launch is going to disappoint. In the long term, I kind of get that Wall Street, I think my thesis is that Wall Street will understand ETH more than they understand Bitcoin. They'll price ETH as technology. They'll price Bitcoin as gold. And so I think that the price fluctuations and the risk asset premium that is given to ETH will be higher than is given to Bitcoin. But I'm very worried about the beginning.
Yeah, I think, Ron, I'm 100% aligned with you in that it's in the beginning is going to be tough. I mean, you've seen that there's not that much demand for the ETN out of London, and you just seeing in general, you're not seeing all of that chatter. But that's because these things take time. Ethereum is objectively an easier sell to institutions and to large money than Bitcoin is. When you pitch Bitcoin, you're pitching an entirely new monetary system. People look at that and they just scream Ponzi. When you look at ETH, you're doing the same thing, but you're also hiding it because it has other use cases other than just being money. And so you can look at it and you can say, well, you can build applications on top of it. It's a platform. It's like a Rorschach test of tech. You can put whatever you want on this thing, but it's going to take time once the ETF launches for people to go approve that. Okay, now that the ETF is launched, let's dive into it. I guarantee you the moment that the ETF got approved, research teams are put on this. Right? Hey, what's going on 100%. With ETH? And I think the takeaway is going to be, hey, this thing's really pretty damn cool. We should probably buy it. And that's probably going to happen in like 6 months, unfortunately.
Okay, so then I think we're aligned. If you're talking about 6 months, we're aligned. I'm worried about the first 3 months. I'm worried about the fact that it feels to me like we've been caught off guard in 3 months.
Listen,
like, if you
I don't like to dispense any advice. I just personally like to wait for the market to come to me. I have a shopping list. I'm not willing to go out there on a limb right now. It's the summer. I'm looking to go on the beach and read. While all this stuff you know what I mean? Like, I just know we're not in an environment where like people have made a lot of money over the last, as Avi alluded to, the last 9 months. That probably takes time to kind of prune and run through its course. And people want to lock in probably profits. It never hurts to have cash on hand to bid.
I mean, you talk about going to the beach and reading, but then where dopamine, sir? I need dopamine. No dopamine hit.
Man, I get it running and cycling, man. You'll find other ways with dopamine, candidly. I think it never hurts to, like, we could be in an environment where Solana's sub 100, Ethereum's sub 3,000, and Bitcoin could still be in the ranging. We could be in that like environment where just Bitcoin holds really well and everything else kind of doesn't. My biggest concern is macro, right? I mean, you could have, so far as you pointed out, yeah, the Nasdaq's ripping, but if that sort of invalidates, like, imagine a scenario where all of a sudden tech goes down, Nasdaq goes down, like, yeah, I wouldn't want to be holding any of this stuff, not even Bitcoin. So, you know, you
have to have a thesis.
I'm usually always, I skew bullish long term, but I always want to have at least 5-10% of my book in cash for those moments where the market absolutely pukes. and I just, you know, I feel better that way.
Okay. I mean, I think that's a good thesis. When the ETH ETF gets approved and when we finally get a bid for ETH, what does that do for the ETH ecosystem? And when I talk about the ETH ecosystem, I talk about the L2s, I talk about Optimism, Arbitrum, maybe even ZK Syncs, maybe Starknet. What happens to things like Athena, Lido? What happens to the ecosystem? Anything in the short term?
Look, you want to go long ETH beta? The best way I think to do that is through call options of Coinbase.
Okay, fair enough.
Because of base, and the market's already catching on to that meta. Look at Brian in the latest, report. Analysts are catching on to that. JP Morgan had a good analyst report coming out. Like, the market's slowly understanding the potential of base, and it's, Brian said it in the institutional day. It is the #1 priority in Coinbase. You have 100 million users. A lot of them might start coming on chain, and they're going to go through that through base. So, from an L2 ecosystem perspective, and mind you, I've invested and seeded in a lot of other L2s, but base, I think, not tech-wise, but base itself offers some really interesting, I think, exposure. If you want to have higher beta to ETH, I think it's base, and the only way to express that view, I think, is through Coinbase.
I mean, you could draw a thesis and say, okay, so Coinbase is one way to do it, and I am quite heavily invested in Coinbase. I was very public about the fact that I went all in at about $40. I also think that another proxy is going for Optimism, because Optimism earns fees from the stack, and I think they published recently the amount of fees that they earned. And then, I mean, two other plays which I'm looking at, if you want to go that thesis, is Aerodrome, which is the biggest DEX, and then Velodrome, which is the biggest DEX in optimism. And that's because of, ultimately Base will feed into the super chain ecosystem. And probably we think that Velodrome. So I think for me, it's like DEX, you can't really go that wrong. The chain itself, if you can invest in the chain itself, you can't really invest in Base. I agree with your Coinbase thesis. What about things like Arbitrum? What about things like Lido? What about things like ENS? ENS is actually one of the few tokens that's actually had a fantastic week in the sea of red. Like where is this bid coming from? Where is the Lido bid coming from? And I saw earlier. I think I saw it was in the top 200 coins. It was here. ENS, Rocket Pool, Curve, we know where the bid came from. I don't think that requires much discussion. What are they thinking? Just bid for ETH, bid for the ETH layer 2s, bid for ETH, bid for the ETH proxies?
Well, I mean, I actually don't think we're seeing a tremendous amount of it's specific assets that are doing very well. Like if you look at ETH beta in general, it's not doing well at all in any way, shape, or form. It's not. What's doing well? ENS is doing well. Lido's doing well specifically because of this airdrop or this speculated airdrop with Symbiotic, and their sort of pivot more towards an eigenlayer type product. It's actually not clear to me whether they're going to derive where the Lido token is going to derive any value from that. So I think that's also the market's fear, is that they don't know if that value is going to flow back. And I think that the reason that ETH beta is not doing amazingly well is because, again, people are skeptical about this launch. If you get the ETH ETF and ETH punches through and ETH goes hard, like goes up 25%, goes up 30%, then what you get is attention back to the ETH ecosystem. So once you get attention back to the ETH ecosystem, people are like, okay, maybe retail starts going down the list. They start actually using ETH a little bit more. Transaction counts correlate with price massively. And so my view is, if you want to buy ETH beta, you can actually just wait to see how ETH does. And if you just own ETH and you own a lot of ETH, and then at some point ETH continues to rip and you want to cycle out and you want to go buy these other things, you can do that. But there's no reason to pre-position.
Yeah. I mean, I agree here with Avi. I think I know, like, thinking about risk and how much incremental risk units you're taking for however much gain you expect is very abstract type of thinking. But let's put it this way: I think you construct your portfolio for a bear market, not for a bull market. And unfortunately, a lot of people get shaken out. Like, and the reality is, like, if you like, look, in 5 years time, 10 years time, or like 5 years time, it has been incredibly hard to outperform ETH. It just is, right? And I think you have to think of yourself in a position where the market pukes 20-30%. Are you going to be shitting your pants because you're holding a bag of beta and like, or are you? I'd argue most people feel way more comfortable holding a bag of like majors, and most people just be fine just like buying the top majors, like, and by majors, Bitcoin, ETH, Solana. And if you just hold that bag for 5 years and you just walk away, I would argue that, like, if you do a back test, most people would grossly outperform relative to whatever thing that they've been doing over trading. And I mean, so like, these discussions are useful. I think you have to pay attention to how Arbitrum unlocks get absorbed, how optimism shapes out, the value accrual to the L1 and all this L2 activity. Like, it's useful to pay attention to, but ultimately, I think it's hard to compete against the pure, like, ETH asset, especially when you have an ETF and that catches the bid. So now, you brought it up. You brought up Solana. A lot of people are fighting Solana, saying, look, it's topped. It was all about meme coins. The meme coin cycle isn't really recovering very well. If you look at the charts in terms of meme coin dominance, a lot of people criticize Solana that all their hype and all their transactions and all their fees and everything else they were talking about all came from meme coins. I think we can all agree that the meme coin cycle has cooled down, and I'm going to put my neck out there and say, I don't think we're ever going to see a meme cycle like the one we saw. I think it's very similar to the NFT narrative, where it was cool and it was fun, and then people got wrecked, and then I don't think people are going to rush back to do it. I'd love to hear your views on it. But the question is, like, are these naysayers right? And are these people right where they look at the Sol ETH chart and they say, look, it topped when the meme cycle thing topped. As soon as ETH got the ETF,
the capital must move out of Solana back into ETH. And so now you can see that the 𝗏/ETH chart there's a 33% down on the 𝗏/ETH chart. Santi, I know you told me you were long. You were super long.
Look, I continue to believe there's no reason why Solana shouldn't be worth at least how much Ethereum is. That might take more than perhaps people want to wait. But I think in investing, you have to get one thing very right. I think Solana is still non-consensus among institutions. And people like to overfit these narratives, right? Of, oh yeah, meme coins are down, therefore Solana should go down. And people are once again turning their back on Solana. I like that because it allows me to continue to accumulate something that I fundamentally believe is a superior user experience, a superior chain. You don't even have Fire Dancer yet. So I think meme coins are just a glimpse into the future of where activity is going to happen and the type of consumer behavior that happens when the chain provides a better user experience. Now, there are issues with the chain. We all know them. There's a lot of sandwiching attacks. There's MEV, there's malicious MEV, and there's, that needs to be figured out. The chain is not perfect, but I would argue that I have more conviction that mainstream adoption happens in Solana than it does anywhere else at this moment in time.
Yeah, I must say.
For that reason,
behind
I
the
just think
thesis.
Solana should, yeah.
I also, by the way, I just want to make a point on meme coins. I think you're 100% wrong. I think that meme coins are here to stay. That we're going to have we're actually going to have an even more insane meme coin cycle at some point in the future.
I love to hear it. I love to hear it.
It's going to be ridiculous, and you're going to puke. Like this one, we didn't even get. I think like they're going to be multiple $100 billion meme coins at some point in the future, and then it's going to blow up horribly. And the reason that I believe this is, we'll just take a step back to NFTs. Why did the NFT market collapse? The NFT market collapsed specifically because of the meme coin market, in my opinion. People were speculating using NFTs. They were effectively just trying to replicate what a meme coin is better at, which is the ability to gamble using NFTs. And then now you have like NFTs that are actually good, that are still, traded because there's actually some value associated with them. The reason that the market died is not because of any other reason than people just moved to meme coins. And I think we've reached the pinnacle of what a good speculative asset is in the meme coin. And maybe we'll have some iterations on what meme coins look like. But the reality is that people are always going to want to gamble. $100 billion spent on the lottery a year in the US alone.
People tend to gamble more during recessions also, for what it's worth.
Okay, so you think that's great news. It's music to my ears. Maybe it's just I've got meme coin fatigue because I just think there's so many fucking meme coins and whatever else. But maybe I'm too close to the fire, and maybe you're right. Maybe the celebrities are going to come in and launch meme coins as fan coins, and we're going to get these massive meme coins. I don't know.
Dude, it's just starting. Think of all the celebrities that have launched meme coins right now. These are all like D-list. Who the hell is 𝗔𝗔𝗍𝗍? I don't know. She's around, but every time like a minor celebrity comes into crypto, everybody blows them up like they're the most amazing thing in the world. Like, most of these people have never heard of 𝗔𝗔𝗍𝗍 before. Andrew Tate's it's fine. I guess he's got an audience. Well, he's not fine. I don't really like him, but whatever. These guys are not serious people. Ron, we are going to have a serious person launch a meme coin in the next 2 years. I guarantee this, and that is going to send us off to new heights.
Okay.
Meme coins ripped in an environment where we had choppy flows, no flows actually, and so consider the fact that if at some point in the future there will be more flows coming into the space, and do you think that's going to go more towards some vaporware infra project or a clean meme that has no issue of high FTV, low flow?
I want to think that it's going to go into a proper infrastructure project, but I think it's going to go into meme coins, unfortunately.
When you say proper, it's I agree there are some proper infrastructure projects. I also agree there are not so proper infrastructure projects that are not necessarily necessary.
It's the difference it's the difference between what I tell my wife I do and what I actually do. I tell my wife I'm a crypto investor, but I'm actually a crypto gambler. Okay, so it's the difference between what I tell. Now, the difference between meme coins and protocols is, at least in protocols, it's what my wife thinks I do versus what I actually do, right? Like we know we're gambling. I mean, let's just call a spade a spade. We know we're gambling. But I don't know. My wife certainly thinks that I come here every morning and I'm investing. That's just the way that it is. I don't know. I don't know. Yeah. Also, I think I'm really bullish about Solana because I'm really bullish about DePIN. And I think when you look at the DePIN projects that are actually launching, now I think DePIN projects have had a bit of a rough time because meme coins have taken the limelight. And I think we saw V1 and we saw some successes. But when you look at the list of DePIN things that are actually happening on Solana, I mean, this is not the full list, but just giving an idea of what's going on. Teleport and Helium and HiveMap and Render. I think Solana has positioned itself as like really the only L1 chain that has any kind of meaningful DePIN project. And I make a caveat here. There is a project called Peak, which is launching specifically as a DePIN chain, a substrate DePIN chain. But for now, Solana's like positioned itself as like the DePIN chain, right?
Yeah. Ran, I'm glad you brought DePIN into the equation because out of all the verticals, it is the one that I am most excited about to bring. We've all struggled to convey the reason of existence for crypto, I think, to people in, former colleagues or whatever. DePIN makes crypto incredibly tangible. No one cares about fundamentally decentralization. Most people. I think when you go to someone and say, here's a data plan, it has better coverage and is a fraction of the cost, and I'll give you the hardware for free. There's no arguing there. And I think the DePIN makes it now, it's interesting, Avi, I'd actually be curious because no DePIN trades at more than like 500 million. I think the challenge with DePIN networks will be showing, and maybe I'm over intellectualizing it, showing that you have the coverage, you have the the networks up and running, but can you translate that to meaningful revenue and monetization? And I think that's something that I'm looking at. Maybe that's the reason why a lot of these DePIN projects, from HiveMap or to GeoNet to a bunch of others, even Render, like haven't really broken through and traded at like what infra trades, like over $1 billion. None of these projects, maybe in the private rounds, but like are publicly trading at over 1 billion FTV. Now that's actually a good thing in my mind. But I think it's still quite early in the DePIN kind of narrative.
Here's a question for you. Are any of these guys actually validating their valuations right now? Like, do these projects actually generate enough revenue or enough usage, you think, to
probably not
justify
yet? Probably not yet.
it?
Probably not yet.
No, well, no, not really. Very few of them, actually. Now, the question is, are you valuing them on revenue basis? I think you should. I think you should always, discounted cash flows, like fundamental analysis. Crypto doesn't trade that way. It trades on terminal value. All of it. But I think like that's when I talk to every DePIN project, I think that's the thing I'm most focused on is like, can you actually translate a lot of can you actually monetize and capture revenue? And that's been, I think, the biggest challenge.
What are your favorite DePIN projects? Santi, what are the ones? Because a lot of them I think are hot air garbage. I've got to be honest, like everything else. But there are some real projects. Like I really think Helium's a real fucking project. Like, you look at their data plans, the data plans are competitive.
Rand, I'll point out. So I passed on the Uber Series C and D when TPG invested in it. And the reason is a good project.
How does that make you feel? How do you feel about that now?
Actually, great, because I would have lost money.
Okay.
No, it was a huge pref stack, very structured deal, but you would have not outperformed.
Okay.
Yes, like it would have. And here's the thing: on a unit economic basis, Uber is not a very profitable across most of its markets. Like the major ones, New York, San Francisco, starting to break even, like as of like a year ago or like 9 months, a year ago. And when you look at unit economics of something like Uber and a lot of these networks, like they're not very profitable. And so for that reason, I think you just stay disciplined and pass. And the market at some point catches on to that. I'm excited for DePIN. Long term, I think a lot of the projects that you've listed and are currently that I'm seeing haven't really figured out how to monetize. They can get the supply side figured out. In the same way that Bitcoin miners, like Bitcoin is a network in and of itself that is incredible, right? You have all these miners distributed that are investing billions of dollars in ASIC chips to mine something that they think has value, like a digital oil, gold, whatever. This like remarkable. DePIN is no different, right? You're convincing all these people, from Uber drivers to local enthusiasts, do it yourself, to go out and buy some hardware and then be owners of a network and earn a stream of cash flow. Historically, these Web2 businesses are highly profitable because they're quasi monopolies, like American Tower, which controls most of the cellular coverage in the US, like has made a killing. Look at American Tower, public stock, killing of a stock. It cranks out cash flow. It remains to be seen like what the unit economics of DePIN networks will be. A lot of it is dependent on the tokenomics. Now, so I've done a few investments. The only one that is like publicly listed, and I guess public, is GeoNet. I've invested in it along with other funds. It was direct OTC deal. It's GPS and location based.
Okay. What about the rest? What about
this
things
is
like
financial advice? None of this is legal advice. When I looked at it, when I met the team, they were getting more attention from industry people, like in agriculture, even people that are like mining, Hive Mapper. Like, location data is really relevant for a number of industries, from Pokemon Go, like geolocation stuff and games, to agriculture, where you need the level of precision that is like required that GPS does not provide. So, and I think like the economics for a miner that has this antenna and has like a super node is actually really compelling, because you don't need many nodes. They were already covered all of the EU, most of the US, with a fraction of the money that like there's like three traditional companies that have been trying to do this, but they've raised hundreds of millions of dollars because they have to spend on all the capex. GeoNet doesn't have to do that because it convinces do-it-yourself people to go out and buy the hardware. So again, a lot of these DePIN networks, I'll cut off my rant, is they have figured out the supply very well, like the coverage, no problem. The demand and particularly how the demand fluctuates based on increase in prices, and like, are people actually there? Presumably they should, right? They shouldn't care. The person that is buying Helium shouldn't care that it's crypto or anything. It just fundamentally is a cheaper and better data plan. Now, acquiring users from Sprint and T-Mobile and AT&T is hard. Like, the customer acquisition is actually expensive. So can they actually do that in a compelling LTV to CAC? You know what I mean? Like, or are they spending thousands and thousands of dollars to acquire these people? I don't know. So I think it's a missing piece. Long term, I think DePIN is going to be one of the most, it's like the email for the internet. Before the email, no one really understood what the internet was for, but email made it pervasive. It was like, shit, I have Gmail. I want to have now a computer in my home.
That's a great
not just
analogy.
to work, because everyone wants to fucking communicate.
That's a great fucking analogy.
Plan. Everyone wants a data plan. So the things I'm looking at is the Solana phone. That is really interesting experiment. Jumbo's launching that as well in more like in Africa and emerging countries. Airdrops, as far as they're created, I think they work for particular use cases for phones and getting people, like acquiring customer, phenomenal mechanism. So yeah, I think DePIN is the category that I'm most excited about. Whether it's this cycle kind of thing or next cycle, I don't know. I think the experiments we're seeing here right now are just kind of V1. But from where I'm spending my time, it's like top 2 categories.
Avi, are you bullish or not? Are you bullish the DePIN narrative?
I mean, after 𝗪 gives a speech like that, it's kind of hard not to be.
Again, but the good product doesn't necessarily make you money.
Right. It's a very compelling speech, and I think this is a little bit of what I've always run into. I mean, I can't say I've spent a tremendous amount of time on DePIN, but I did spend a lot of time underwriting Helium, and my takeaway is that while it's a phenomenal product, and I actually think that it could really scale, the question is, do you make money when you're running a network like this? And that to me is a tough question. And there's actually, I don't think anybody's cracked it yet, and it's going to take some time to figure that out. I do think that the one thing that works against them is that almost all of them have the model of you earn the token by providing value to the network. But the amount of token that you earn is way more than the actual value that you provide to the network in terms of what they're able to take out of it. So there's going to need to be some balancing act of that at some point in the future. And so the answer is I'm not really sure. I know that look, the things that are the most compelling to me are the location data, and then actually like Helium providing data. I don't know about when you categorize, for example, a rideshare experience as DePIN. I'm not necessarily sure if I even agree with that categorization, because at the fundamental, the way that I view it is that DePIN is providing base level services to a variety of people in a decentralized manner, right? So it's like a base level service is computation, a base level service is data, a base level service is location. When you start to build on top of that it becomes a little bit more complicated. I actually think a company might be better in that case. But if we can just decentralize all of those base level services, then I'm very bullish on that actually being the future of how we interact. Whether that makes a ton of money or not, I guess remains to be seen.
Any specific projects? Any specific projects or not that you're looking at?
I really just Helium and Hive Mapper. I got to look at this GeoNet thing though. And Render. Helium, Hive Mapper, and Render. I actually haven't even heard of these other ones.
I had a podcast with Mike, the founder. He's like Bill Nye the Science Guy meets Neil deGrasse Tyson. I've learned so much from this guy about like shit that like you never thought was like how GPS works. And anyways, go listen to it. He's a cool dude. But Rand, I think like zooming out, like as an industry, we can prove a couple of things. One, that we can scale networks in a far more efficient manner. Point number one, I think that will detonate a ton of interest because networks are incredibly hard to figure out the supply and the demand. And that I think is relevant for DePIN. If we can prove out that we can figure out in some capacity the retention of gamers, well, there's a lot of games coming live. Gaming is a narrative that is totally overlooked now. There's a lot of money that was invested. There haven't been really good games launched, but if there's a killer game out there this cycle that proves out that like you can retain a lot of these users better than traditional games. Like the gaming industry, not just in crypto, has gone through this. It's a very tough environment. Very few studios are making money. It's not just crypto. So I think if you can prove out that a gaming studio that delivers on crypto with NFTs and Web3 properties, I think it's off to the races again. And AI. I mean, I think a lot of AI agents will start using stablecoins. And if we can also get human feedback to feed these models and train them in a more cost-effective manner, the model becomes better. Look at what 𝗏𝗍 is doing, and I think if we can prove that, it will bring a lot of attention to crypto from a business model perspective. And then okay, let's actually like
then we're off the races.
Yeah, I think there's like 3 catalysts just to offer before we close out, like things that I'm looking at. Maybe a lot of those are not this cycle kind of thing, but the funding and the attention is always earlier than the actual application being delivered. So,
as you said, we're investing in terminal value, guys. We're completely out of time. So first of all, thank you. There's been a lot going on here. I mean, we've covered a lot. Avi, welcome. You're now part of the Banter fam. We'll see you again soon. Santi, you've been a part of the Banter fam for a long time. To you guys, I will see you guys again, not next week. Remember that I'm going to be in Los Angeles next week. I'll be intermittent. If you want to catch me, I'll be on Twitter. Otherwise, I'll be back as soon as I get back from filming Killer Whales. Remember, while I'm gone, it's the day that I get back, we are launching Baked. When we launch Baked, the only way that you can get Baked right now is if you sign up for your 𝗏𝗏𝗏 account or if you've staked your gummy. So sign up for 𝗏𝗏𝗏. Deposit money, make a trade in the account so we know that you're not a bot, and then you will get some of the baked airdrop. I will see you guys again soon. Until then, trade well, my friends.